Right now there's talk about a possible so-called insurance cut in rates. In 1998, as I understand it, you cut 3 times when we had the Asian crisis developing. Does it make sense to make an insurance cut? Because after that you came back and raised rates. But is that a sensible thing for the Fed to be thinking about, as an insurance rate cut?
Yes. Forecasting is very tricky. Certain forecast outcomes have far more negative effects than others. So in that sense, you will act to reduce the risk of those types of events, and that's a valuable thing to do. I mean, I remember very distinctly on a number of occasions we cut rates not because we thought that it was highly probable that it would be necessary, but the probability of what would happen if indeed it did happen was very large relative to what other events were. So it's a relative balance. And if you consider that there are certain small probability events which could be very dangerous, it pays to act to see if you could fend it off.
One of the things that's being talked about now is the need perhaps to cut rates, both because of trade uncertainty. Chair Powell talked about that in his testimony quite specifically, as well as anemic or slowing global growth. Not even so much in the United States, but globally. Do lower rates help form a remedy for trade uncertainty and or slowing growth?
It's not something I recall being active in that type of activity. But they might and they might not. I don't think that in and of itself is a reason to act. But there is relative trade-offs to this day.
When we talk about growth, fiscal stimulus is another alternative to monetary stimulus.
Where we come up with these terms, I don't know.
Well, whatever we call it, we just have had a new deal made, bipartisan deal here in Washington, to raise the debt ceiling, to raise the spending caps, to spend more money. A lot of it in defense, some of it in domestic. That is a form of fiscal stimulus. Is that likely to lead to greater growth?
The one you're talking about, no. One of the reasons, remember, is that when you increase the deficit, if it is prolonged, it'll end up as inflation. You know, when over the decades, when people became very irresponsible, what would happen? You'd get inflation, which meant, in a sense, people would be discarding money in a manner which affects prices. And more I hear about what's going on at the moment, there's an awful lot going on.